Welcome to Business with Louis, the show where we dive into the world of entrepreneurship and explore the concepts that drive success. Today, we're talking about accounts receivable management, a crucial aspect of any business operation. As my friend and fellow entrepreneur once said, cash is king, and managing your accounts receivable effectively can be the difference between thriving and just surviving. So, what is accounts receivable management? In simple terms, it's the process of tracking and collecting payments from customers who have purchased goods or services on credit. This concept has been around for centuries, dating back to the early days of trade and commerce. The idea is straightforward. When you sell something to someone, you expect to get paid, and accounts receivable management helps ensure that happens. One key concept is the accounts receivable turnover ratio, which measures how quickly a company can collect its outstanding receivables. A higher ratio indicates efficient collection processes, while a lower ratio may indicate slow payment or inadequate credit policies. Another important principle is the idea of credit risk management, which involves assessing the likelihood that customers will default on their payments. Influential thinkers like Peter Drucker and Michael Porter have written extensively on the importance of effective accounts receivable management in achieving business success. Drucker, for example, emphasized the need for companies to manage their cash flow proactively, rather than simply reacting to payment delays. Porter's work on competitive strategy highlights the role of accounts receivable management in creating a sustainable competitive advantage. Let's look at some real-world examples and case studies that demonstrate accounts receivable management in action. Take, for instance, the story of Walmart, which has implemented a highly efficient accounts receivable system that allows it to collect payments from suppliers quickly and accurately. By doing so, Walmart is able to maintain a healthy cash flow, invest in new initiatives, and stay ahead of its competitors. On the other hand, we have examples like the now-defunct retailer Toys R Us, which struggled with slow payment cycles and inadequate credit management. As a result, the company faced significant cash flow challenges, ultimately contributing to its bankruptcy. These examples illustrate the importance of effective accounts receivable management in achieving business success. So, how can you apply these concepts to your own venture or career? Here are some practical tips. First, establish clear credit policies and communicate them effectively to your customers. Second, implement a robust accounts receivable system that allows you to track payments and identify potential issues early on. Third, consider offering incentives for early payment, such as discounts or rewards, to encourage customers to pay promptly. Additionally, you can leverage technology to streamline your accounts receivable management process. There are many software solutions available that can help you automate tasks such as invoicing, payment tracking, and credit risk assessment. These tools can save you time, reduce errors, and provide valuable insights into your cash flow. One common challenge is dealing with slow-paying customers. To mitigate this issue, you can consider implementing a payment plan or offering alternative payment methods such as online invoicing or mobile payments. Another challenge is managing cash flow during periods of rapid growth. When your business is growing quickly, it can be difficult to keep up with demand and manage your finances effectively. In this situation, it's essential to have a solid accounts receivable management system in place so you can ensure that you're getting paid on time and maintaining a healthy cash flow. According to research by the Credit Research Foundation, businesses that communicate effectively with their customers are more likely to get paid on time. This highlights the importance of building strong relationships with your customers and being transparent about your payment terms. In conclusion, accounts receivable management is a critical component of any successful business operation. By understanding the core principles and theories behind this concept, you can develop effective strategies for managing customer payments and minimizing financial risks. Remember, every great business starts with action, so take the first step today to optimize your accounts receivable management process and watch your business thrive. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.